Hello guys, and glad to have you on board again today for our regular exercise session. I'm sorry for the guys being live with me. I just somehow messed up with the record as you guys didn't have the screen share. So we'll start over again. Anyway, I'll do this one real quick. So what we're doing in these sessions is basically what you guys should do at home. If you can't make it to those live sessions, but practice anyhow and anyway. That's how you get better into trading. Not reading books, not looking at 100 hours of videos, but to just look at your goddamn charts and replay or scroll back in time, make some past analysis so that you can see what the contexts are looking like in diversified markets. This is the thing about trading. I give you a set of rules that can be some abstract stuff in the first place, but you'll see that if you use these rules in multiple markets that has no direct link between them, I mean, you can use this into, I don't know, whichever crazy biotech stuff or crypto, these rules still apply. So even if you scroll through different unrelated assets, these rules will always lead you to the appropriate time frame and the appropriate structure that you can take advantage of. Okay? So in order to see the beauty of it, you need to see the beauty of statistics, which is exactly what's been explained in the first pages of the PDF manual, and that's everything I wanted you guys to learn from this damn PDF, is that trading as a professional is like being an experimentator. You need to put some experiences, stuff out there, and there's no such a thing as randomly changing the experiment rules. So the rules have to be the same, repeated over and over again, and they have to be repeated a strong number of times so that the statistics can show relevance. So that's the reason why every context you learn, I want you guys to apply it as many times as possible on as many different assets as possible. Not just trying to analyze the stuff you care about and the stuff you want to buy, but analyzing every available fucking stuff out there. Lucky for you, there are unlimited amounts of stocks that you can scroll out there. So the way I do it and the way you should do is by randomly picking two letters on the keyboard and searching for stocks that have sufficient level of history so that you can make your analysis. That's what we've done in here. So I'll redo this one very quickly. Okay. So we have gone putting F and H as an input. I've been selecting stocks in here, and we've picked Foghorn Therapeutic. Okay, so we came up with this. Quickly, we can see that the moving average has been setting below a falling context. So we know that anyhow and anyway, a trend has been occurring into this time frame. So let's put our skills at play and let's do the trend analysis. Are we able to figure out this trend's intermediate maturity? Okay, so like I said, here is a couple of complicated stuff to figure out because for multiple reasons, you have to analyze a downtrend where your eyes will mostly be used to uptrend moves. So I recommend you to do this when you see a downtrend, just reverse the scale, okay? And you'll be able to see the things that the way your eyes will mostly be able to figure them out. Most of the trend occurs to the upside in stock markets, okay? So you rather like to reverse the bear ones. That's one way to put it. Now that you have the structure, where's the goddamn breakout? And what's the goddamn structure? So I would say, where's the range that has preceded? That would be something like that. That's, whoa, that's an bizarre range. Okay, then we can see that there is our bottom in here. We broke out of the range in here. This could have been a pullback. I mean, we definitely closed below 50% context. Oh, what the hell is that? Look at cycles. Look at the cycles in here. Oh, we're in a, this is the problem with stocks in 4-hour chart reference. The cycles uploaded in the daily and there's not enough history out there. So cycles in here will not necessarily behave the way they should, but still in here you can see that there's an anomaly. I mean, we would have been breaking in here, okay, though trending, the thing is that, boy, you can see that there is way too much oscillation in cycles. We're not supposed to see such a thing. Okay, remember that normally we're supposed to see cycle anomalies on a breakout. So whatever this is, looks odd. We have a pullback in here. We've terminated bear cycles. We have a mature range on the lower time frame or something that looks like it. Anyway, we've retraced more than 23%, so I don't know what this is, but that could be a pullback. So in that perspective, what the hell is that? It looks like another pullback. So 2 pullbacks. The only remaining option in here is that doesn't look like a trend, like a classical type of trend. So this is normally an alternate structure. When you have this, when you have anomalies, you have an easy way to figure out what the rational outcome is. Okay? So let me put it straightforward. When you study a trend, you know that there is a trend in here. The moving average has gone below the context have been converging. So this is definitely a trend. The question is, what was the structure? 1 pullback, 2 pullbacks? Wow, what would you do next? I mean, of course, we've already done it before. Like I said, I just messed up with the record. So let's not spoil the conclusion. Okay, there's an overlap between this resistance and this second pullback. So at that point, I think there's no other way to put it but to say this is a wave 1 extended. It has a weird way of doing things because normally we V-shape reverse, so this is great. We generally don't pull back in here to catch a third range boundary opportunity before breaking the range. We normally break the range immediately out of the V-shape. So we've got everything, okay? We've got a violent reversal, we've got 2 pullbacks, and there is an overlap in between the 2. This trend is wave 1 extended. Therefore, we have 2 final excesses, and this one is the one that terminates the trend. So what we have now is a market that is consolidating a bear trend. We have found a rock bottom area in here because we are reversing scale. So this is an area in which reversal trader would have bought the dip. For those who know how to reverse trade, which is expert context. But anyhow and anyway, if you righted that trend, this is where the story ends for you. So whatever we are into now is no longer a trend. So we are in a range after a trend. This is what's going on now. But as a trend trader lesson and exercise, all I want is you guys to be able to figure out that bear trend, to find its structure, and that's what you need to do. Then move on to the next asset, okay? You've terminated your analysis in here, so go for, I don't know, KN, Knowles Corporations. Okay, I can see a trend. Let's study the trend, okay? You put your goggles, which means what you want is to see a trend and figure out the structure. Can you identify all of the intermediate stuff? So in here, there is a big problem. We can see that bear trend, bull trend. Oh boy, this is definitely a range on the higher time frame. So we need to find, oh, come on. Whoa, this one we're going to keep. We're going to, I mean, I definitely remember this one. That is just crazily good to trade chaotic range structure, which is definitely what we're going to save for the next session right after for range traders. So this is KN on 4-hour chart time frame. Great, we'll do this one right after. Okay, big fat range. So sorry guys, but we need to move on to another asset. This one isn't trending. So KN again, KNM Group BHD. Great, there is a trend. Nice, sweet. Whoa, whoa, whoa. Nice bug. Nice bug, bro. No way. Oh shit. Okay, give me a second to just hide this indicator. Okay, as you can see, I still have some job to make. Whoa, whoa, for trending context, we're going to have the good guy. So this one is definitely for trends. No, this one is gonna be a gorgeous asset for everyone's willing to learn trend trading, because oh boy, this is the best things you could get. You get a bull trend, then a bear trend. It is Perfect. So you guys are going to do the entire analysis, okay? In here, we probably have everything we want. We probably have multi-time frame trends, and we're going to have them in both directions. So this is great. Okay, so let's start with the bull trend. Oh boy, absolutely beautiful. Okay, so what is this? Are we on the right time frame for this trend? You don't need to look at the prices, just look at the context boxes. Okay, is this a trend? That's definitely a big yes. Moving average far above rising context. So yes, this is a trend, but is this the reference time frame? No, it's not excessive market. Okay, let me be real clear. When you contextualize the market, the first question is it a range? Is it a trend? Okay, so you know how to define these things, okay? Then you've got excessive market. What is the difference between a trend, okay, and an excessive market? I'll let you guys answer the question. That's a true question, so please do the answer. What's the difference between a trend and a bubble? No, the parabola can come from other things. So in your trading perspective, contextualizing perspective, how do you differentiate these two? Because you know that trends have multiple variants, okay? You've got the classic trend, which we will call wave 3 extended. Okay, this one is the classical trend structure that you know about. Okay, the range, accumulation, breakout, pullback, final excess. Okay, that's the classical way of doing things. But we also know that there is also two alternate options for this. You know that we have wave 5 extended. Just like wave 1 extended, the one we just seen before. Okay, these are two alternate structures, but we also know that trends can also take multi-time frame structures, okay? And we know that multi-time frame trends can look pretty damn excessive when the trend you're looking at is actually having 3 time frames, okay? So like when you have a daily plus weekly plus monthly breakout all at once, it damn will look excessive on the daily chart, but still this is not an excess. So how do you differentiate a trend and a market excess? Also remember that when you use your trending context, you always look at 3 factors, okay? The 3 key elements is that you're always going to have a look at the time frame above. Then you will look at the moving average, you will look at the trend cycles, and you will identify the previous range, because there's no such a thing as a trend until you have, oh boy, until you have assessed what the previous range is, because every trend breaks out of a range. So if there's not a mature range preceding, this is not a trend. So through these factors, what would be the difference between a trend and a market excess? Now, this is truly excessive market. There's no reason for this not to be. But if you use your strategy rules, you cannot assess this to be a market excess just like that. Out of the 4 elements we look at, okay, I'm going to note them down. So the first one is anyhow and anyway, we need to look at time frames above, because getting to your conclusion without looking at the high time frame will lead you to false flags. Then we look at the moving average. Okay, the moving average will help us confirm that the trend is there, or in which maturity it is. We'll look at trend cycles as well. Oh boy, sorry about this one. And then we have a look at preceding range. Okay? So, which one of these rules is stopping us from getting to the conclusion that is an excess or a bubble? Because that's what you told me. You told me this is an excess. I say, no, you can't do that now. No, it's not necessarily a problem for cycles. I mean, yes, definitely cycles in here would tell you that the breakout likely occurred somewhere in there. But still, you're never going to get the answer from just one of these things, okay? It's not, okay, I've seen the cycles, this is it. It's always gather the damn informations before putting an answer to your question, because most of the time you'll have an early answer, which means lots of problems can roll into this answer. Look at everything. So, of course, looking at the cycle, I would say the breakout definitely occurred in here and I can barely see it. So, the preceding range, I cannot even see it. I can see somehow of a range with the cycles, but oh boy, I can't see the preceding range. I can barely see the trend cycles issues in here. The moving average, well, there was no moving average back then, but here I can definitely see that there's a trend. And anyhow and anyway, I need to look at the goddamn higher time frame. So before putting the conclusion that this market is in excess or in a trend or whatever, anything else, I know it's a trend, so it cannot be a range, okay? The only thing I know now is that this is not an option, so it's either going to be a trend or a bubble. My only remaining options now are these two. But the thing is that how am I going to pull one off this table means I see already that I have cycles issues, so I know I'm not in the right time frame to put an answer to this question. So I'm going anyhow and anyway to the higher time frame. There's no other choice but to do this. Okay, weekly chart. What do we have? In here, there's no preceding range. We immediately go from bearish to bullish. We immediately go from nowhere to extremely bullish. The breakout is definitely in here, and there is no reason for us to think any different. I mean, there is no room for error in here. We see that there is no preceding range, that the breakout is in here, and that the trend that has followed is excessive. Context and resistance boxes being fucked all over the place. When you see this, even in real time, I mean, at that point, there is no other way around this analysis but to say this is a freakingly excessive market. I don't know what that is, but this is fuckingly expensive. Yeah, 4 exits. I mean, oh boy, please, no signal. The signals in here just comes to confirm. But remember that when you read the market, the first things you do is you contextualize the goddamn thing you are into, then you find the appropriate structure and pattern you're going to use, okay? Because in trends, we know, and I'm going to re-record the trending context, okay? Because it's really essential for you to understand this, okay? So the way we do things in trends is that, first of all, we identify, and then there is a choice of alternate structures, because trends, okay, they have different shapes. They can be multi-time frame trend, wave 5, wave 1 extended, okay? And finally, in the end, we use our set of patterns, okay? Which means we first need to define which structure we have, because the different structures will put the different contexts in orders, the different patterns, okay? Remember that we have the accumulation. Okay, so accumulation, breakout, break. Okay, got a trend follow. We've got the pullback. And the final excess. Okay, so these are our patterns in the ranging in the trending context, And the alternate structures will put these things in a different order. Remember, wave 1 extended has an immediate breakout, generally no accumulations, and then we have no trend follow because we will figure that trend too late, and we will have 2 pullbacks and 2 final excesses. Wave 5 extended have 2 breakouts, can have an accumulation, but then the trend follow is less likely going to be met because the final wave is going to be damn excessive. There will be no pullback, okay? You remember that? Okay, all of the alternate trend structures. And the multi-time frame trend means that you're gonna have to trade the larger time frame trend first, and this will have effects trickling down on the lower time frames. Is still everyone there, or have I totally lost you guys? Okay, this shouldn't be new, okay? Of course, I re-record the courses in the trading lessons because I think I can do better with this, but always have to figure out that trend context has to be settled in 3 ways, okay? You use your first set of rules to contextualize which one you have, and they should also help you figuring out what structure you have, okay? So in this case, what we have in here is no wave 3 extended, no multi-time frame stuff, no wave 5 extended. Why? Which one of these things tells us that this is no trend, but a market excess? Yeah, it is excessive anyway, but you can have excessive markets on multi-time frame trends, just like you could have them for temporary offers in wave 5 extended. Remember that the goddamn PDF manual is an introduction. The PDF manual is not a go-to place for yellow or orange level. The PDF is just there to be to act as an introduction, to let you understand that anything you're going to jump into in here is going to be complex. So the PDF is excessively complex in purpose. I've done it for a reason, to push away all of the short-term gamblers and weak traders who just want to find rapid answers to their solutions, to their problems. I don't want these guys. So the PDF is there for them, because none of them will read the PDF manual. They will ask for trial, and they will not be able to use the indicators correctly. So they'll move on to some other guru trader out there. And I definitely want that. I don't want these guys in. They waste my time. Okay, so we are now moving ahead. So you definitely no longer need the PDF manual. Best case scenario, you will just have a look at one of the outputs that you forgot the name or something. But normally at that point, being yellow, nothing in the PDF manual matters to you anymore, okay? So what we can tell out of this is that there hasn't been a mature range. So this is where the answer lies. Why is this an excess and not a trend? Because there is no other way this could be a wave 5 extended or multi-time frame trends, because multi-time frame trends, just like wave 5 extended, the wave 5 extended would require an overlapping structure, which we don't have, and the multi-time frame trend would require a preceding range, which we don't have. So in here we have no other options but to figure out that it has been a market excess. Then market excesses and bubble, just like we've done on the previous example with Phantom, which is not recorded, but it's happening due to something else. So in here, anything that has been pushing prices so violently in here is either there is a good reason for it, like there is a huge momentum growth and so on, or this is just speculative bullshit. But there is no other way now to put an answer to that question but to dig into the fundamentals. Okay? So remember that the strategy is meant to put you where you have to go. The set of rules to contextualize the fucking market is there to safely put you to a conclusion. Now, can you trade that conclusion or not? Depends. The further down the rabbit hole you'll get on with me, the more context you'll be able to exploit. But this asset here and now, this trend or whatever that was, is anyhow and anyway not a technical structure you can profit from. So whatever this is not something you can profit from. No, it's not a mess. It means it requires further down the road analysis. And if you want to profit from this, you're going to have to use techniques that I haven't yet taught you about. Okay? So this just stops here. But you have done your job. Following the goddamn set of rules that I taught you, you were able to figure out the right answer. This is not for me. If I want to trade this, I need to have the help and assistance of a more experienced trader than I am today. I will be able to do it on my own tomorrow, but certainly not today. Okay? You've got the answer. And if you are able to do this on your own, even if you don't trade this asset at the moment, well, you will do a damn better job than most other traders out there because you know what you can do and you know what you can't do, which is so many people just forget about. So many people think that anyhow and anyway, they are stronger, they are better than the others, their ego is striking hard, and they will trade things that are far above their current knowledge. So they trade into dangerous situations, and sooner or later, the shit happens. Yep, if you think you're too good, and not patient enough to figure out that you're dealing with more complex stuff than what you can handle, sooner or later the shit will hit the fan. Okay? So somehow finding out as an answer that whatever happens is out of your grasp, that's much better than the average traders. Okay? You'll learn how to navigate these in the future, and you shouldn't even pay attention to this today. Okay, let's move on. So in here we have our thing. We have our answer. For this market, there's nothing we can do about it but to just move on. This is an excessive market, so whatever happened is for experienced traders to analyze, because that's what we have, a market excess, so it is not a technical structure. One thing that could have... No, okay, I'm not going to go further down this road. So this is excessive, period. Okay. Next. Because, of course, bullish, bearish. Oh, boy. As you can see, bullish market. Try to find the market top of this. I wish you good luck. Okay, this market neutralizes. You're lucky because you had a third range boundary to get the hell out, which is not nearly going to be the case every time there's a bubble. Because whatever is at play is generally not going to offer you an exit door. So in here, very nice exit door. Third range boundary, very great. Okay. Oh yeah. Oh boy. Whoa. Oh, the one that bought the pullback in here has had nicer surprise. I mean, it just lost 60 to 70% capital. Oh boy. Yeah. 70% loss for anyone who's been buying in here the supposedly pullback. So, like I said, anyone who's been thinking that this was a trend has been entirely fucked in here. So that would have been a normal fourth range boundary entry. But in here, once again, indicators are there to save your ass. They'll tell you that when we were just going down in here, just 5 context boxes before, we had lower prices. So that should tell you that it's moving way too fast to be a classical correction. So anyway, in here, lots of issues. Whatever happens is none of your concerns. And of course, we keep fucking capital of whoever's invested in here. You're going to lose money, and it's going to keep being losses and losses because, oh boy, these markets are the worst. Okay, so at that moment, we've gone from bullish to bearish. The market is trying to neutralize. again. Oh boy, the pain is there. Imagine, for the guy who's bought in here, never found its prices back again. We're nearly 5 years later and he lost 90% capital into this investment. Of course, I wish it triggered a stop loss, but I know it won't. Okay, so as we are now, we've gone from bullish trend to bearish trend. So whatever you do next, you know that this is range. Anyhow and anyway, it's gone up and down. So if it ever go up again, okay. Yes, the PDF manual is a mandatory stuff. But in here, we're making experience stuff. We're intermediate level. Okay, so this is not for beginners. I'll start right away with the beginners. Give me an additional 5 minutes and then we'll switch to beginners content. Okay, so Kimi, you should be absolutely lost now. And that's normal. We're more than 2 steps ahead of you here. Okay, so for trend traders, we've gone bullish, then bearish, which means bubble and crash. Whatever is going on in here is not something you can trade. This is a crash pattern and you don't know anything about it. Okay? One second. Okay, just noting down something for the future. All right. Venture capital, who knows? That can be multiple stuff, but any of the things that has been really at play is something that you cannot understand at the moment. Just drop it. I mean, like I said, that doesn't mean you won't be able to do it on your own in the future, but certainly not today. So leave it to whoever is able to trade that, but don't be someone else's dumb guy. Okay? This is just like poker players. Okay? When a dumb guy comes at the table, all of the smart guys know, and they will likely profit from it. So just try to not be someone else's dumb guy. All right. So we've terminated the analysis for this thing. Anything that happens now is a crashing pattern. And if you want to buy that, you need to buy low volume, low volatility, and buy and hold. So that will be the area in which I will start to think about it. There is still too much volume. All right, here is not so bad. Not enough volatility. The volumes have gone down into this area. Bullish signals. This is where I would have attempted something. I mean, whoever bought it has lost 95% capital. So I think it's an appropriate time to try getting in. All right, I'm making a little bit of money and I'll probably stop profit taking sooner rather than later. Taste the moving average. Okay, I'll profit take in here. Take profit patterns above the context. I'm not going to try anything else. I mean, that's a nice gain. I've doubled my entry price. Let the rest for the dumb guys. Okay, down again. Still too much volume. I mean, I'm not buying this crap. It's gonna make new lows again. I mean, at that point, we have to go, oh boy, we have to go log scale. Whoa. I'm gonna wait for new pain, new lows. Look at the cycles. They're still broken. Okay, here we go. Here I'm gonna start buying again. Waiting for a signal. Here, exit. Oh yeah, here is where I'll try to buy. I'll buy again in here. This is buying crash. Okay. Ooh. And I've lost half my capital. So this is buy and hold anyway on these things. Oh, pain. Oh, pain. All right, I'm finally making gains. All right, here's where I'll profit take again. Moving average, tiny higher prices. I mean, I've gone in at 28. I'll get the hell out of 40 or something like that. And I have lost 70% capital in between. So as you can see, buy and hold, always with cash, safe assets. So in order to make a 30% gain, I had to risk 70% capital in the worst places. That's what this is, guys. That's also why buy and hold simply doesn't work every time. Okay, it is a complex situation. In here, whoever's got in here has lost 70% capital to make a 30% gain in the end. And out of this, I know that anyhow and anyway, this thing is gonna be a waste of my time in the future. It just means now we've gone below the introductory prices, so much pain trade. I mean, those who bought at the market top are now in losses of 99%. This is not a crash. 99% means this thing's worth shit. Okay, at that point, I don't know what this thing is, but I move on to something else. I've made my 30% gain. It's still better than a loss. But anytime this thing is going to retrace, everyone who bought in is going to get out. Luckily with a gain, and it's not going to be easy for everyone. Okay, anyway, it's enough for today. This is, anyway, we're jumping into expert contexts. Buying crashes is nothing you guys should do. So we're going to stop it for today. Okay, so next time we'll do it again. I'll pay attention to how many people have been looking at that goddamn video, because if you're still not enough, I will stop these things. I have more important stuff to do. If you don't pay attention to the content, I'll readjust. Okay, so bye guys. See you on the next ones.